And good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So today we'll be talking about the key events and developments that are currently impacting the markets, with a key focus on Trump, who is the main mover of the markets since 2 weeks ago. Of course, we'll also do a quick cover on the economic calendar, the top events to expect for the day. And once we're done with these, we'll do some technical analysis and try to understand the prevailing market structure and where the markets might be headed next. So as always, remember, these sessions do not constitute of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So, good morning and key shout out to Nyabura Ndongo for being the first person to join in the comment on the comment section. So hello Manu, I can see Maureen, Rono, Hilary, Zef, Dan, Samuel Njoroge. Good morning everyone. So let's get things started. So I can see Marcelina is in the house. Good morning, thank you for joining. So the very first item on our cover today is still the same page we had yesterday, but with more updates. And in this case, the main highlight this morning is that Trump said he's not considering pausing tariffs despite global turmoil. So this was straight in an interview yesterday in the evening. So there has been a lot of speculation that Trump could be pausing tariffs either globally or for some countries, but he has been strongly opposed to that idea. So he's making it even harder for countries to negotiate. However, on the market side, a lot of investors have been speculating that maybe Trump would consider pausing some tariffs for quite a good number of countries, but so far we haven't seen any progress. So case in point, we have seen countries like Israel zero rate their tariffs against the US, expecting that the US would replicate the same, but it hasn't happened. We have seen it happen with Vietnam. Also, they decided to zero rate their tariffs, but then Trump has insisted that the tariffs must come into effect, and that is expected to happen on the 9th, and that is tomorrow. So far, a lot of countries are panicking, trying to set up meetings with the US, but somehow Trump is not handling it very well. So we have seen several key developments. One from one major global economy, which is the European Union, where the EU chair, Ursula von der Leyen, also proposed zero tariffs on industrial goods between the EU and the US. So far, Trump hasn't agreed yet, and we are seeing even more developments. So let's look at some of the highlights we have seen since yesterday. So Trump passes on pausing tariffs as global turmoil deepens. Also, he threatened to add an increased 50% tariffs on China. So already he has slapped China with 54% tariffs. The initial round was 20%, then he added 34%, which made it 54%. And now he's threatening China with 50% more tariffs until they offer a solution where they balance their trade, where as much as the Chinese guys are selling more goods to the US wants access to a similar market in China, so that the trade balance is at least zero or beneficial to the US. So that is the key highlight of the markets today, and we'll be looking at more developments as the day progresses. So big tech stocks were bull. This was a big sell-off yesterday, with the majority of the stocks opening on the red, but eventually later in the evening we saw most of these stocks making some good recovery. So if, for instance, you look at the map yesterday compared to the map we had on Friday, almost all the stocks in the SP 500 were losing. But then yesterday being Monday, we opened with a big negative and panic selling in our stocks. But then later on, they started recovering, and you can see some big names closed in the positive. For example, Nvidia was 3.53%. We also saw Cathy Wood's ARK Invest buying some of Nvidia dip, and this ended up in the green. Amazon had a nice recovery, closed up 2.49%. Google and Meta were also doing well, but other big stocks like Apple still ended in the negative. Tesla was in the negative. In healthcare, we had big names like Eli Lilly also closing in the negative, as well as Johnson & Johnson. So on the other hand, if you look at financials, they made quite a recovery, with JP Morgan Chase closing up 1.98%. Bank of America was up 3.46%. So as you can see, overall, the tech sector did particularly well, but then the rest of the market didn't follow suit. So if you look at consumer defensives, industrials, real estate, utilities, they were majority in the red, and even consumer cyclicals. It's only Amazon that's a key highlight gainer, but the rest of the market in the sector was majorly in the red. So we'll be following closely for today's progression and try to understand what will be the key developments as the market opens. So still on the same, we will be looking at even more highlights. So threatening Beijing is not right way to engage with the US, and this was from the Chinese embassy. So China wants to negotiate from an equal seating rather than being bullied around by Trump. So they have held to their end of the bargain, where they also decided to implement tariffs against the US, 34% tariffs, and they have threatened to even implement harsher trading terms in order to get Trump on an equal negotiating table. So this deadlock between China and the US is basically driving panic in the markets. And for the first time, we are seeing gold now resuming a bullish trajectory. So unforced error and uncertainty, how a dramatic day played out on the Wall Street. So this has been a pretty interesting story. I don't know if you are affected yesterday, but I'll give you some background to what happened. So it turns out one very popular Twitter account called Walter Bloomberg. It's a guy who literally updates, gives market updates every single day, and he does it really fast. So yesterday he had this opportunity to share market updates, but he made a mistake. So he basically misquoted a White House official who was basically being interviewed on CNBC. And on misquoting him, he posted a market update on Twitter. So the market update basically said that Hassett, who is a White House official, a senior one for that matter, Trump is considering a 90-day pause in tariffs for all countries except China. So when he did this and did the tweet, people are very quick to question his sources. So the first question was, Walter, where did this headline come from? And he basically said it was from Reuters. And on another question, he basically said it was from CNBC, but upon verification, it ended up to be false, or what we would call fake news. So the hilarious thing is that from this one, I'm hoping everyone can see. I hope it's wide enough. So, so there is this anonymous X account. It's called Walter Bloomberg. It's a Swiss dude, but his real name isn't Walter, and he doesn't even work for Bloomberg. It's quite weird. So he takes paywalled financial news and pumps it to over 850,000 people on his feed on Twitter. So this morning he said Trump was going to delay tariffs by 90 days. Markets ripped and added $1.2 trillion in minutes. So I'll be showing you how the markets reacted after that, because the news was spread very fast. And after that happened, what we saw was basically the market gaining by trillions, especially the SP 500. And then once eventually the White House decided to come clear on the allegations, they said they are not considering a 90-day pause in tariffs. And after that, we saw the market selling off. So an 11% range on the NASDAQ, I believe a 10% range on the SP 500 and a 7% range on the Dow. And all this happened within a span of 10 minutes. So it was quite crazy, especially seeing that happening in the markets yesterday. So there is a full story on the fortune. So false report of Trump considering a 90-day tariff pause sends markets on a wild ride. So stock markets went haywire on Monday morning as rumors of an impending tariff respite caused the SP 500 to soar over 7% and then give up nearly all those gains as the White House pronounced rumor to be fake news. The episode, which began with a tweet around 10 a.m. Eastern Time, underscored both the current market skittishness as well as the peril of relying on social media accounts. The tweet in question came from an anonymous X account known as Walter Bloomberg, an apparent reference to the financial news service Bloomberg, that publishes a series of rapid-fire headlines. On Monday, the account tweeted that the director of National Economic Council, Kevin Hassett, said President Trump was considering a 90-day pause on all tariffs except China. The report then spread like wildfire on social media and was briefly repeated by news outlets, including CNBC. 1 hour later, though, the White House issued its statement denying the report, and soon after, the Bloomberg account deleted the tweet. As markets fluctuated following the initial tweet, others on X, including a real Bloomberg journalist, began questioning the source of the news. In response, others shared another tweet from reporter Aaron Lupa that showed that Hassett News was based on an Fox News interview earlier that morning. So that was some mad volatility that happens in the market yesterday in the evening. And of course, we have seen the impact of social media on the markets. And this is basically to show you that during such times of high volatility, where Trump is literally the one driving the markets have become so sentimental and less fundamental. So people are very quick to react to new developments, especially from Trump, and that has become a key driver. So in such a market, technicals tend to have to hold less, and sentiment tends to drive the market. So when sentiment changes, we'll be seeing some trends changing in the markets. So outside of that, trying to see what other highlights we may have missed. So US markets are mostly lower at closing after volatile trading session. We know that this morning they have been pretty positive. We'll take care of our friends, says Trump. And this is after he sent an envoy to Japan to discuss some negotiations about tariffs. And in this case, we have seen the Nikkei 225 index make a very important recovery as markets are hopeful that US and Japan will come to some positive developments on their tariff negotiations. So Trump would welcome lower barriers to US exports, says White House economic advisor. Of course, that has been the main goal. He wants fair trading agreements between US trading partners. So, of course, at some point, you'll be seeing Trump making deals with some countries as he goes country by country in terms of negotiating the tariffs he implemented on Liberation Day, which was April 2. So, if China doesn't pull back on its reciprocal tariffs by midday on Tuesday, midday today, that would be around 7 p.m. Should be around 7 p.m. in Kenyan time. Then Trump reiterates that he will raise tariffs against them by 50%. We have a 36 trillion debt for a reason, he adds, and they will be talking to China, among other countries, to make a fair deal and a good deal for America. It's now America first, Trump says. So we will eliminate trade deficit with the USA, Israeli Prime Minister says. This is after he traveled to the US yesterday. Though they couldn't do a public release or a public interview, he is hopeful that they'll get into an agreement with Trump today. So more nations seek dialogue with Trump as tariffs roam. US to open trade negotiations with Japan. This is from the Treasury Secretary. Japan remains among America's closest allies, and I look forward to our upcoming productive engagement regarding tariffs, non-tariff trade barriers, and currency issues and government subsidies. Writes in a post on social media platform X. So as you can see, even U.S. Treasury Secretary Scott Bessent is using X, or formerly Twitter, to share very important updates about the tariffs, the whole tariff thing, and this is having real-time impact on the markets. So if you're not on X or following some of these top decision makers, then you might be a bit late getting news in a market that is literally reacting to social media updates. So is Trump right about oil, interest rates, and food prices? This is a question on a recent interview that Trump did, and he said that oil prices have gone down. He wants interest rates to go down, food prices have gone down, and he's very confident that inflation has come down in the US. Of course, we know that on the economic calendar, we'll be expecting the US inflation report later in the week, and this is expected to clarify the direction of prices in the US economy and potentially the next fair trade decision. So clearly, there's more updates on this. I'll be sharing the link with you guys so that if you wanna keep following and getting direct updates, you can check from here and other social media accounts so you are updated on key market developments. So on the Forex side, this is what we have seen since yesterday. So since the day started, the New Zealand and Australian dollars have been quite positive, doing really well against the US dollar, with the biggest gainer being the Australian dollar, being up 1.2%. So the Japanese yen is up 0.5%, and the Canadian dollar 0.47%, with the Swiss franc little moved against the US dollar. So remember when we talked about these moves yesterday, we mentioned that for the week, the Japanese yen and the Swiss franc were the biggest gainers. But now we are seeing a bit of a change, with the Australian dollar taking the mantle as we progress with the week, and the UK pound being the biggest loser in the last 1 week against the US dollar. So on the last or the prior 1 month, the Swiss franc is still the biggest gainer, and the Australian dollar is still the biggest loser to the dollar. So for the day, it seems like the Asian pairs are the ones that are benefiting or gaining against the US dollar since the day started today. So on other key market developments, trying to look at the key highlights. So stocks rebound. Stocks in Europe and the Asia Pacific rebounded on Monday. After Monday's sharp sell-off, though trade tensions remained high. EC President, this is the European Commission, President Ursula von der Leyen, said the EU had offered Trump a 0 tariffs deal on industrial goods, but he rejected it. She warned the EU was ready to retaliate with while China vowed to fight to the end. The stock 600 was up about 1%, and the Nikkei 225 jumped 5.7% amid reports that Japan may get priority in US tariff talks. Stock futures in the US were also in the green. So Indonesia inflation rate at 3-month high, dollar slips as trade tensions cloud outlook. Brent rebounds after sharp sell-off, and Australia consumer sentiment drops to 6-month low. Japan current account surplus hits record peak, and US used car prices fall in March. So trying to check if there's any other updates we may have missed. Well, I don't think there is more. Commodities are holding on well this morning. So as you can see, from gold to silver to copper to soybeans, wheat, coal, as well as gas, they are all in the green, with some other commodities being on the red. On one side, we have crude oil, which is down, Brent is down, natural gas is down, gasoline and heating oil, in this case, they are particularly down. Steel, which was faced with tariffs, is also down, and lumber is also down. So we are looking at precious metals and industrial metals being on the upper side. agricultural commodities are doing particularly well, especially soybeans and wheat. So clearly, it's not like yesterday where everything was pointing downwards. So on the stock market indices side, there are a majority of them are in the green. So if you look at the SP 500, US 30, US 100, or the Nasdaq, Nikkei 225 index is the biggest gainer, being up over 5.5%. UK 100, 1.3%. Germany, France, Italy, Spain, Australia, and Shanghai, and the Sensex India index all doing well, particularly this morning. So it seems like we are having a green day today, though it's never too early to call it. Sometimes it might start in the green and then you get to the New York session and then everything changes. But so far, what we are seeing is some form of optimism and the markets making some important recovery this morning. So that being said, I believe it's time we jump into some technical analysis and try to understand where the markets might be headed next. So kindly give me a sec as I try to check if there's anything we missed. Of course, we didn't touch on the economic calendar. So today being Tuesday, the 8th of April, I don't have any major news announcement or major market moving news. So we'll be having Ivy, or the Ivy League schools purchasing managers index from Canada, and this is expected at 5 p.m. later in the day. So before we get to the next market snapshot, which will be at 11 a.m. tomorrow, we'll have already seen an interest rate decision by the Reserve Bank of New Zealand, where we're expecting a rate cut of 25 basis points from 3.75% to 3.5%. And this is expected to be a major mover in the New Zealand dollar pairs. So if you're not prepared, then you know that tomorrow by 5 a.m. is when we expect the most volatility from New Zealand dollar pairs. So Bank of Japan Governor Ueda will be speaking at 9:15 a.m. So you have to be prepared for that. And the main highlight of the day will be the FOMC meeting minutes. And for oil traders, we'll be having crude oil inventories at 5:30 p.m. So clearly, it is going to be quite a busy day, with the main event of the week being the US Consumer Price Index, which is a measure of inflation, and we are expecting inflation to have reduced to 2.6% in March. And the data is coming up on Thursday at exactly 3:30 p.m. So that being said, trying to see if there's anything else we missed. So far, I don't see anything else that we may have missed. So I'm looking at our key highlights. Yeah, so there's this one more update. China responds to US tariffs by selling another $50 billion in treasuries. So China is among the top countries that hold US treasuries. So as the tariffs trade war continues, and China is holding the line, they are not conceding to pressure from Trump. Now they are threatening to offload some of their treasuries, which would literally crash the US bond markets if they sold all their treasuries at once. But then they are basically teasing it by selling $50 billion. And of course, this is having an overall impact on bond yields. So clearly, we expect more development between the two economic giants. So any updates from China, updates from the EU, updates from Japan, updates from Trump and his team will likely be the top movers in the markets today. So that being said, let's jump straight to technical analysis and try to see where the charts are headed and what are the key highlights as of this morning. So I'll be starting with the dollar index, which has been pretty bullish for Friday last week and Monday, which is yesterday. So today we opened with a slight gap towards the lower side, The dollar index kept sliding, but now as we get into the London session, it shows some likelihood of making some recovery as it establishes some form of technical pattern here, where you can see the sequence of lows are getting higher, and also the sequence of highs are also getting higher, which basically implies that the dollar index is in a bullish channel, with the overall price momentum for the last 2 days, today being the third, indicating some slight bullishness. So with this happening, you'll notice that, for instance, if you look at Euro USD, now it's the opposite. It's the Euro gradually losing some ground to the US dollar. So yesterday, we had a nice pattern here with the market retesting this higher area, and we projected that the price would drop to around these areas here. And now we are seeing a similar pattern, the euro retesting the upper trend line, finding resistance, and now we could be having a new low, and that new low could be the weekly low or the lowest price as per yesterday. So good likelihood that we see the euro giving back some of the gains and dropping towards 1.08835 if the structure continues holding. So you look at pound USD, it's doing quite a similar thing with the USD, the pound is doing a similar thing with the Euro USD. So from the H1 chart, you can see it has been a big sell-off in the last 2 days. That was Friday last week and yesterday. And now from a 15-minute chart, you can see there's some forward trend. And if you go to the 4-hour chart, it shows some form of likely continuation of the bearish momentum, with key level targets being around 1.26885. Which was a previous support area. So more likely that we see the pound ceding some ground and going a bit lower to 1.26885. So the UK 100 or the FTSE 100 index, which is the benchmark index for the UK stock market, has had a big sell-off. And you'll notice that from the most recent high, it went down by about 15%, so not into the stock market crash territory, but way deeper into correction territory. After the big sell-off, there was some nice recovery yesterday in the evening. It's still down about 12%. So from the 4-hour chart, you can see that there was a really strong attempt to make a bounce. So if you go to the 15-minute chart, then you'll notice that the market responded quite positively. So the news I was highlighting about Walter Bloomberg tweeting about the market happened right here. So in a span of a few minutes into the New York session, the market rallied by 4.52%, and then in a few minutes later, raised all the gains after the market realized it was fake news. However, that is not to be assumed. What's important is that this basically set a range for the market, with the upper and lower side of the range being here and here. And since then, the market has been trading inside that range. So we are seeing more of a sideways momentum happening in this market. And this sideways momentum could continue for a while until we have more developments in the market, showing us any progress between the UK and the US in terms of policy and tariff negotiations. So far, we haven't had much, and notice that the market has simply been sideways since open. So we'll be getting more developments later in the day, and likely the market will break out of the range. So any break out of the range would likely lead to an increase in volatility and potential trading opportunities once the range is broken. So we should be watching this consolidation for the day and looking for opportunities on the break. So as for the dollar trading against the Swiss franc, we mentioned that the Swiss franc was the strongest. So yesterday, it managed to continue pushing down after our session, but then during the afternoon, rallied all the way up and then moved back downwards. And now we are seeing a market that is attempting to form a new pattern here. So remember, if we had to decide on the phase that the market is in, we would say that this was an impulse phase. And now we are in some form of consolidation phase, where overall, over the last couple of days, or I would say the last 2 days, this has been the overall momentum in USD CHF. So In this case, yes, the dollar is strong this morning, but there seems to be some pretty strong resistance around this area here. So perhaps you should be watching this area to see if there is opportunities to short, unless something changes here. So dollar yen, we projected that the market would close the gap and then move further back downwards. So these played out for a while, and then eventually the market broke towards the upper side. In this case, what we were seeing is the yen giving back some of the gains it had made earlier. So remember, the overall trend here has been bearish, and the yen has been really gaining against the US dollar. So yes, some pullback was necessary, but now we are looking at a market that is, I would say, arguably consolidating because there ain't much happening here since the market opened. So if anything, we should just be tracking this kind of price action here to see what direction it breaks to. So believe we also have our USD. We expected the market to cross the gap, retest, and then drop. So this played out later in the evening, but then the market got right back into the pattern. So now we are looking at a market that was extremely bearish, finding support here and then retesting support area again. And now we could be having what looks like a sideways momentum. And as I mentioned, if this was considered to be an impulse phase, then the current phase we are seeing in the market is more of a consolidation phase, where the markets will hang around in a sideways momentum until we have the next key thing driving price momentum. So we don't have that yet. So I expect more of a sideways momentum until we have a key market driver. So on the other hand, we've had quite momentum in gold. So very strong 3-day sell-off in gold. Erased quite some gains. This was about 6.66% drop, with some of these days ranging quite a good number of pips. So for instance, if you look at Friday's price action, the range or the difference between the highest and the lowest price was over 12,000 points or 1,200 pips. So this basically happened within the span of a day. So if you look at Thursday, this was a range of 11,000 points or 1,100 pips. So still very high volatility. And if you look at the range yesterday, this was literally 9,800. So yes, the volatility is reducing a bit, but still, I would say gold is still extremely volatile. So in such a volatile market, we know that we can experience such wild swings in price action. And the key idea is always to wait for the momentum to start and then trading the direction of the momentum. So far, we are seeing some form of attempt from gold to make a recovery. Notice that the weekend gap was crossed first before the market continued with the sell-off. And now we are seeing some pullback here. And this pullback might look simple and easy since yesterday's low to the current price action. But if you really look, this is 4,827 points, or basically 482 pips. So this strong bounce has been gradual, but the sell-offs are usually almost at an instant. So if you remember something I mentioned yesterday, bulls climb up the stairs, bears jump off the window. So when the markets are selling off, it's usually in a very strong panic. So for instance, if you look at the 3-day sell-off here, so within a span of 3 days, the market erased gains that had taken, if you count from here to here, those are gains that had taken 14 trading days, but now erased within a span of 3 trading days. So yes, when bears are coming into the market, they basically jump off the window. It's a big panic selling. But then for a bullish market, the growth is usually gradual. So here we are seeing very strong gold as of this morning, but we could be seeing this accelerating depending on how we see developments happening from Trump, China, and the EU. So the main focus would be on acceleration. So if there's escalation of the trade war between US, China, EU, and Japan, then this would likely pump gold higher, and we could be seeing gold moving towards previous highs. On the other hand, if there's de-escalation or some form of deal between Trump and any of the mentioned countries, I'm talking about the EU or the European Union, China, as well as Japan. So if we see some form of deal, even with India, that would be taken as a positive news in the market. So positive news in the market would mean that gold has a sell-off and stocks start making recovery. But then if there is an escalation, stocks continue going down and gold gets back to previous highs. So we don't know yet how things may proceed later in the day. So we'll be watching closely. So on the oil market side, we know that we have seen a big sell-off to levels that we haven't seen since 2021. We'll be expecting the crude oil inventories. I believe that should be tomorrow. And now we are looking at a market that already has uncrossed gaps. So we had a missing gap here. It wasn't crossed. We had another gap here, which was crossed. And now we are seeing signs of recovery from oil after the big sell-off that happened last week. So from the daily time frame, if you go to the 15 minutes chart, you'll notice that yesterday, during the Walter Bloomberg saga, this is what happened. So market made a big rally and then erased all those gains immediately. So even oil markets were not spared. So now you can see that the market is more in some form of gradual recovery from yesterday. And I would say that we could be seeing the market remaining within this kind of formation for a while until we get the next market driver. So I would be observing this for eventual breaks, and that hasn't happened yet. But then we expect to continue seeing some of this consolidation playing out in the markets. So as for US equities, for the Nasdaq 100 index, this is the Walter Bloomberg saga as it played out yesterday. A very strong rally and then immediately erasing some of those gains. And if you estimate from the lowest price here to the highest price, this was a 10% swing. So clearly a lot of money changed hands on fake news. But now we are seeing some gradual recovery in the Nasdaq. I would say that this market has been moving upwards. And if you look at this at the edge, I would say this has been the overall prevailing trend. But then as of this morning, I would say we are not seeing much of a momentum here. So clearly, this is a market that is muted or basically just simply trading sideways. So at some point, we should be expecting to see some form of break, evidence of buyers or sellers joining the markets. But for now, nothing much is happening. So you'll be watching closely to see signs of a break. And once we have signs of a break, then that might likely lead to a trading idea. So you go to US 30 or the Dow Jones Index. It's still also in this territory where we can say it's just moving sideways. You go to the SP 500, volatility has also reduced. So clearly more of a sideways momentum. So we'll be expecting to see more activity, especially during the New York Open. So Bitcoin made a big sell-off yesterday, dropped all the way down to 74,585. But then if you notice, there's a technical pattern playing out here. So after bouncing from this area, went all the way up, got to 81 to 45, has retested again, and is now moving towards the lower side. So clearly, we should be expecting to see more of bearish momentum, but this is also dependent on Trump and the progress that we are seeing in the markets. So kindly give me a sec. All right. So on the European side, we're also seeing stocks making a recovery. So from here, you'll notice that there was a small gap here at the market open, and now we are seeing the market attempt to close the gap, and I believe this has been done. So on the EU50, the gap has been closed successfully, and we are seeing the market bouncing strongly. So more likely, we'll be seeing some more bullishness playing out. The German 40 index also making an impressive recovery this morning. So clearly, there is some form of optimism continuing. You look at the Spanish 35 IBEX, also after the dip yesterday, is attempting to make some good recovery. France also doing the same. So good chance that we might likely have a positive day, but this really depends on what Trump will be sharing later in the day. So let's check on the comment section to see if I missed any questions here. So first question is from Raymond. Trump team debates exporter tax credit to offset tariff harm on U.S. farms, aiding manufacturers with year-end rebates. Plan needs Congress approval. Of course, we know that for Trump, he has full control of Congress, so I don't expect him to face any form of difficulty in supporting American farms. So it's not something to worry about. Of course, a lot of companies have been worried whether their businesses will be impacted, and if so, by how much. So they have been pushing for legislation that would protect them from the downsides of the tariffs. So clearly, we'll be expecting to see more developments on these for the day, and we know that these developments are the key market drivers. So another one from Gary Patrick, should there be a pause on the tariffs at some point? Should expect significant recovery. Suppose it doesn't happen, up to what point can we expect sell-off to continue? What will trigger recovery? So recovery will be triggered by deals. If we see Trump getting into a positive deal, let's say with Japan, that would raise hopes that he will get into a positive deal with other countries. So far, he has rejected deals from Israel, he has rejected deals from Vietnam, rejected deals from the EU, rejected deals from many other countries, and this is causing a market-wide panic. So I should be expecting to see more panic selling unless he gets into a deal perhaps with one of the countries. So morning, when the RBNZ cut interest rates tomorrow, can we expect the New Zealand dollar to weaken, or there will be the opposite reaction usual that we have been seeing on late? So yes, we'll be expecting to see something of some sort. So I don't expect the market, the New Zealand dollar to immediately weaken after the announcement. So from what we have been seeing in the markets, these currencies tend to weaken way ahead of the announcement of a rate cut, because the market can price these news with a very strong certainty. So in this case, we should be expecting to see the opposite as suggested in the comment section. So there's an opinion from Makeria. For gold today at New York, I expect a good sell-off. I don't know about that. So from my side, I expect that it's heavily dependent on what Trump announces later. So conflicts will always be in the world. As a result, gold will always be bullish. Any form of retreat is just for a while. Well, this has some form of truth, but for intraday trading, we are looking at any positive news on tariff negotiations would likely be negative for gold, and any escalation in tariff negotiations would likely be positive for gold. So how much does the FinViz CSM guide you? Do you think the figures should guide someone in deciding on the currency pairs to trade in? I mean, how effective do you think it is? Well, this is a historical record. So when you are looking, let's say, at the currencies and how they have performed, it's basically a historical record. It's basically showing you what happened. Then when you are projecting what will likely happen next, it only gives you some useful information, but it doesn't tell you where the market will be headed next. So yes, it's a historical record, just like looking at the charts. They basically give you a historical record, so you still have to do your own analysis. So when will be the Trump speech? At this point, honestly, I don't know. So I'll be looking at any updates. He's basically scheduling speeches within very short periods of time. And some of the updates he's doing is either on tweets, and mostly his preferred means of communication is through social. So he basically does immediate tweets on, immediate social media posts on Truth Social. So we'll be following closely to see whatever updates he has, but clearly he will definitely be updating the markets later today. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session. So remember, we have a new episode of the Bullish Banter podcast. So in this particular episode, we hosted one of your favorite traders. This is V Dollar. He shared his trading journey as well as his trading strategies. So if you happen to have some time, make sure to check it out. It's available on FX Pesa YouTube channel. Get to grab some knowledge and understanding of some of the steps that he went through in his journey. And of course, later this week, we'll be having a newer episode for you guys to benefit and enjoy more educational and informative content. So that's it. Enjoy the rest of your day, and I hope that you have a successful trading week. If you don't have a trading account, check the links in the description below and register for a trading account. And on the other hand, if you're just learning how to trade, check out the Novice to Pro series. It's available on the FX Pesa YouTube channel. So that's it. Enjoy the rest of your day.